It's evening. It's actually evening after 4. Okay, so we'll talk about hollowing the core, right? And I will start with a very, very basic question. So if we look about the meaning of hollowing the core, right? So what does hollow the core actually really mean? And in your view, how has the topic really become important right now?
Right, so first and foremost, thank you very much for still staying here. I get this this luck that I'm always part of the last panels, but apart from that, and it happened basically 1 or 2 weeks ago at Money 2020 as well, but apart from that, I find that a lot of the people who are, still around, they really, are into the subject. So Vincenzo, I'll try to answer your questions by raising a little bit of controversy.
Okay.
So that we can lighten up the room a little bit, right?
I'm shaking already, but yeah.
So let's take the hollow and the core, right? And let's start with something that it's probably going to sound a little bit odd, because I think that even the core word or the core concept is a little bit outdated, right? So back to the point, I think in the previous panel, one of the panelists were speaking about how, everybody's looking to transform, but basically customize the new things so that it looks very much similar to what they are used from the old. And I feel like with the core and hollowing the core is pretty much into that direction, because the core conceptually means that something, is the nexus, and then everything, just dances around it. And I think that's the concept that was established with core banking and core financial services probably 30, 40 years ago. And I know that there are a lot of, new players into the market talking about neo cores and cloud cores and so on and so forth. But I think there's a case for us to address, a wider topic. And the wider topic is, how do you innovate? How do you create value? Because at the end of the day, everybody wants to hollow the core because they are stuck to some extent with something expensive and with something that it's probably not fit for purpose for today's business. So everybody wants something better, shiny, whatever. They want to create value. And bearing in mind that, our company is called FintechOS, right? So it's the FinTech operating system. We set out like 4 or 5 years ago to enable any company to act like a FinTech, right? And any company means any company, including the banks. So my first conversation, my first topic is going to be core versus what I would call a FinTech infrastructure, right? Because I think the old thinking is you are going to invest in something that it's, a Rolls Royce and it's expensive, but it's going to allow you to innovate faster. And I think that's a misconception, because the reality of today is nobody, no bank, no other, company can really innovate by itself anymore. So whoever thinks that they are going to hollow their core or transition or rip and replace core 1 for core 2 and they are going to be successful, I think 1, 2, 3, 5, 7 years down the line, they would have realized they haven't achieved that. So there's a reason why everybody's complaining that 70% of the transformations fail, because I think they are not achieving the desired outcomes. So I think the first topic that, going back, I will address here is the idea that instead of you thinking that you need to hollow your core and transition to a new core, I would say transition to a FinTech infrastructure. And let me tell you what a FinTech infrastructure means, even for a bank, right? Well, number one, it means that you are supposed to keep some of the old things that are still working well. You are supposed to be able to prioritize in terms of changing or moving to the things that are creating value first, right? And that's probably changing your ledger. It's not the thing that is going to make your customers go bombastic, right? So that's one thing. You know, a fintech infrastructure will allow you, so moving from a core to a fintech infrastructure will allow you to keep the things that are still fit for purpose today or tomorrow or the day after tomorrow. Will still help you, you know, keep the investments that you've made useful. That's secondly. I think it will allow you to deploy what I would call this, you know, type of new personalized products and services faster, right? And you're looking at, you know, there's a lot of people saying, I'm tired of this personalization or hyper-personalization bullshit. It doesn't exist. Right? Well, I think, I run an SME, right? I run an SME. So I can tell you that my SME and then your SME and then his SMEs are actually very, very different in terms of financial needs. Because if I run a technology company, probably in terms of short-term financing and you know, investment, I have certain cash needs. My protection, you know, is very much focused. So if I'm working with Lloyds Bank, do you think Lloyds Bank want to squeeze me if I have a data breach? So, you know, my data protection and cover risks are very different than, for example, yours, who run a consulting company, who is profitable from day one or can produce cash from day one. So therefore, our financing needs in the first 2 years are very different. Yeah. Your protection needs around, you know, SME insurance are very different, and so on and so forth. So I do believe there is a case for us to, you know, start talking about, you know, new generation of products and services. So a fintech infrastructure, you know, bringing all data together will allow you to achieve that. And last but not least, going back to my point about to the point of nobody can innovate by itself, a fintech infrastructure will allow you to loop in best of breed services from the market. And you look, I mean, there was somebody previously here from Revolut who was effectively explaining how they are, you know, partnering with different SaaS providers and cover risk providers and whatever, some of them effectively non-financial institutions, to provide, you know, a one-stop shop for better products and services. So the reality, if you think about it, it's not really, do I rip and replace my core? I think that's a utopia. Nobody can actually do it, right? Do I hollow my core? Yeah, you might want to hollow your core, but you might want to consider, you know, going beyond the term core, right? Moving into this fintech infrastructure because, and this is where I finish my rant.
Take your time.
Yeah, so I want to say something. I'm trying to say something smart now, right? So it's not a, you know, the world out there doesn't need better cameras. How about not creating better cameras, but how about creating better photographers, right? So it's not about the core, brother. It's not about that infrastructure. It's about the value that the end customer perceives, right? So this is where I feel like, you know, when we keep obsessing about how are we going to dance around our existing core, we are missing the point. We are talking about how we can build a better camera, where in reality we should be talking about how we can enable better photographers.
Oh, interesting analogy. Thank you very much. Then we'll move to the next question. In your view, so which organization would actually be successful in hollow the core adoption, and why?
I think so first, going back to our mantra, right, to enable any company to act as a fintech company. And let me give you a couple of examples. I mean, I don't want to brag here. I'll just explain that we work, for example, with established banks. We work with neobanks. We work with insurance companies. We work with e-commerce players, retailers. We work with a few telco providers. We work with agriculture. So I guess the point that I'm trying to make is not that, you know, we do a lot of things for everybody. Right. The point I'm trying to make is that in today's world, and probably more in tomorrow's world, everybody has a financial services strategy, right? Or most of the companies. So therefore, back to your question, who is going to benefit from that? Well, of course, the traditional providers, the regulated providers, the banks, the regulated lenders, the whatever, the financial services will benefit from it. But in reality, you look at Tesco, you look at Orange, you look at there's a lot of non-financial services companies who effectively have deployed core financial services infrastructure. I would say that these guys are even in a better position to explore this idea of, if you are this idea of how are we going to move to a more flexible and value-oriented fintech infrastructure rather than, hollowing the core. Do you think, let me ask you, let's say, do you think that Amazon has a core banking? So I don't want to put you in a...
No.
I don't know the answer. I don't know the answer, right? But I would probably...
I appreciate the question, but maybe, I don't know. Could
so I would probably believe not, right? Nonetheless, whether they do, whether they do have a core or not is irrelevant because they are doing payments, they are doing credit, they are doing lots of insurance, they are doing buy now pay later, they are doing a lot of things, and this is not a conversation.
That's not the assumption to say that necessarily means they have a core banking.
Yeah. But you asked, who is going to benefit from the hollowing the core? So let me give you this perspective.
Oh, right.
Because
it's an extended...
what happens is a lot of these players, so people will say, yeah, but these are not regulated players, so there's very little value for them to deploy a core banking. Yeah, I agree with you. But do you think they have a financial services infrastructure? I bet they have. Do you think they kind of orchestrate those payments? Do you think they make those things work together? Do you think they have a financial customer 360 view of their customers? I think they do. So then, it's the hollowing the core concept. It's also about, how you can leave some of the guys to take care of the banking as a service and, the banking infrastructure, but you are taking some of that mojo away, right? There are companies out there who are packaging their own products and services. There are companies who are, and yes, they book the business, through a regulated player. There are companies who are very intentional about their, loan origination customer journeys. So I would say that there's also this element of a lot of other companies benefiting from this idea of hollowing the core, even if it's not their core.
Right. And actually, are there any references or use cases that or instances that you would like to share with us on, let's say, how banks have actually benefited?
Yeah, absolutely. I think I can give you two examples that I find really, really interesting. One is, so we have this customer, it's called First Bank. And First Bank deployed a couple of years ago a MySys solution that then got upgraded to some sort of a Finastra core. And it's not me saying something bad. I oppose everybody who tells me that Temenos or Fiserv are not going to, or Guidewire are not going to be here 5 years from now. I think they will do great, right? Because there's a lot of infrastructure who is deployed with them. So that's the reality. Now, so this bank acquired a couple of other banks. So they were looking at, coming into the SME market, and they wanted to bring, better tailored SME products, mainly around lending. So they went for a micro SME, and then they went for a full-blown SME, targeted against a couple of industries, and then they moved into SME mortgages and so on and so forth. So if I look at how they eventually deployed that, they used, so it's pretty much a hybrid approach. They used the Fiserv deployed core, the Finastra deployed core for the business lines that they already had established, right? Like the SMEs, and they just use a technology to be able, that allow them to tailor the customer journeys and the services better. But at the end of the day, you were booking against the Finastra. And then as they moved towards completely new business lines that they never done before, like SME mortgages, they were able to deploy, using our lean core capability, a full-blown end-to-end solution, right? Because they effectively looked at it pragmatically and said, can Finastra do an SME mortgage? Probably. Mr. Finastra, how are we going to do this? So, of course, they will say, well, you have to upgrade to this version, and it's going to cost you a certain amount of money, and it's going to take you 6 months, but everybody probably understands it's going to be more of 9 or 12. And then they said, right, so so it's going to cost us probably double because we have to do the upgrade, and we have to spend 6-9 months on something that it's actually not going to bring the value. We are arguably going to be on a state-of-art, let's say, core. Mm-hmm. But if we hollow this and we allow a different partnership in the overall infrastructure, rather than us thinking that we have to consolidate everything into this modern core, then we can achieve faster time to market. We can probably is going to take us 1/3 of the money, because anyway, half of it was being spent on the upgrade. And we're still leveraging the technology and the infrastructure that we had, but we gain flexibility, time to market, and so on and so forth. So that would be an example.
Excellent.
I have other examples with players who are non-financial. So we work, for example, with this agriculture company who is enabling farmers to make money. So they have quite a strong portfolio, a strong portfolio, a strong community of members who are, small entrepreneurs. And initially they came, their core service was around, crops and, seeds and, I'm going to call them chemicals, I don't know. So the stuff that, you typically have to deploy. And then at some point they figured out that they could offer financing options, because if you could probably use a better tractor, to do the work on the field. And then they figured out that since they understand so much, for example, about the crops and so on and so forth, they can provide better personalized insurance for the crops, for the tractor, for whatever type of risks that you are exposed. So I think because everybody talks about Amazon, let's not talk about Amazon, right? They are doing a lot of, but this is a reasonably small Central and Eastern European company who has successfully managed to turn around a good balance sheet. They have a couple of partners with the with some of the banks and the risk underwriters, and they were able to deliver tremendous value for their customers. So my personal opinion is that this is what we should be talking about. Right? It's not necessarily how we change the old. That's an important conversation, but we should also look at ancillary business models for pretty much everybody.
Right. Thank you. So I'll move to the next question. So, does hollow the core mean rip and replace or delayering? So, what are the drivers that financial institutions should consider when determining which approach to follow, in your view?
I'm very biased here. I don't believe in a rip and replace, right? With all the respect for some great companies like Mambu or Thought Machine, I'm still yet to see somebody decommissioning their Temenos T24 and moving to Mambu.
Is that for a risk perspective that you are?
Risk, but I also think it's like trying to. So let's say we stay here.
Yeah.
right? And we, you know, eventually this goes wrong, and you know, we have a fight on stage, right?
Please not.
And then
let's refrain from that because, you know,
as I
family
move out, right? And as I move out, if somebody comes to me and say, Teo, I would like you to forget everything that happens here, and you know, let's start from scratch. Right? This is the rip and replace.
Yeah.
Brother, I can't forget what happened, right? So in reality, there is so much customization. There is so much, you know, that type of infrastructure is so homegrown and is so culturally tied with that organization that it's effectively impossible to replace without basically replacing, you know, the whole core business of the bank. So I think rip and replace does not exist. I think, therefore, you know, approaches where you're starting to take bits and pieces out to different layers. Yes, I do believe, but I do believe it's the right way. It's the only way to do it. But the main topic is that, are you moving from, you know, from an old concept on an old technology to an old concept on a new technology? Because my view is that you should be thinking not only about how you can decommission certain bits and pieces and moving into a neo core, but rather how you can create this, you know, flexible infrastructure that allows you to still use it, that allows you to loop in new products and services faster, and fundamentally it allows you to loop in ecosystem innovation from outside. So I guess I just repeated myself.
It's an interesting consideration, and I think that we have seen a lot of, I mean, at CEDAR we have assisted into several core banking implementations, and my view is anyway that if you go for a complete rip and replace, you have even a lot of other challenges in terms of also getting the same users. You get used massively to a new way of working, a new way of utilizing the system, and I mean the implication obviously are not only from a technology standpoint.
Look, I think I struggle. I mean, maybe it's my limited. So
No,
because
I mean,
you know,
it's
it's like
yeah.
When you reach a certain age, right, you kind of understand that you can't actually do or understand everything, right? It's like some things probably, but not everything, right? So when you're younger, you think that, yeah, with, you know, will and, you know, smartness, no. So I think, for example, if I would be in charge of JP Morgan today, you know, even with all my technology understanding and even with my, you know, I'm not the greatest entrepreneur, but I've built 3 companies, right? They have made money. I have sold it. So it's like I would back myself up with some skills. So I wouldn't go for that, right? So I'm more risk taker. I'm more of a risk taker. I understand the technology. Both my parents were accountants. I spent, you know, the last 25 years in working in technology for financial services. If they put me in charge of any of these banks, I wouldn't go for a rip and replace. I don't think it's possible.
Right. So I'll move to the last question that I have for you. So one aspect of hollowing the core is to actually have core banking platforms acting solely as posting ledgers or systems of records. Now, product capabilities are ideally hosted outside of the core. So what key challenges have you seen your clients experiencing in the transition from legacy to a digital core?
So a couple of them. I would start with the very basic ones, right? So the type of questions. So when I was, you know, in the early stage of our company and I was growing and I was evangelizing probably a more convoluted version of what I'm speaking about today. Right? They will say, yeah, so I got it. You have a very flexible product engine and you can do, you know, multiple lines and combine them together and even create personalized, you know, versions mapped around customer profiles. I get it. It is brilliant, right? But how are you going to map that against our ledger? So I think the fundamental technical question is that, is the ledger that you are supposed to hollow capable of doing this type of stunts? And I've seen both of them. So I don't want you to think that I'm just only a guy with hallucinations
no,
here.
I'm
I'm actually, I've implemented this type of thing. So you would probably need a certain amount of flexibility in your core ledger that would allow you to basically use them as an infrastructure of posting the transactions and doing all the stuff, but keeping the the flexibility and the operational processing outside. If you can't do that, you have a problem, right? So I think that's, and I've seen systems who can't do that, or teams who are not prepared to assume responsibility about around that type of integration, because that's also where a lot of things can actually go wrong. Then you can lose and end up basically with two systems of records who are not reconciled. So I would say that that's typically one problem. Another problem is that there is these conversations about modern product factories, part of what you call a digital core, part of what I call a fintech infrastructure, because I actually believe not all those products are going to be with you. And then one of the reasons to move towards such, towards such an approach would be you want greater flexibility, and you want to be able to, to personalize. You want to be able to take in various, more information and be able to tailor that product or the pricing or the risk underwriting rules for that product to be able to offer that personalized service or use that type of flexibility. And some of the bankers, unfortunately, they don't think like that. So I've been in the, frankly, Monday, I've been in a conversation, I'm not, with a guy who is, very reputational, right? So they are part of an investment bank who has been, involved with a lot of deals, some of them, highlighted deals in the fintech industry. And you could see, I've started to kind of identify whether I'm in front of a traditionalist, right? So people say, yeah, but it's like, tell me how, what type of product. So I was trying to explain our use case, for example, with Societe Generale, right? Where we bundled in various products into this, kind of personalized offerings. Some of them around POS financing, some of them around embedded financing, some of them around, personal loans, and some of them, funny enough, around insurance being bundled, term life insurance, household insurance, and so on and so forth. So this guy was struggling to understand, but cut the bullshit. Tell me what really, and I was trying to explain him. It's like, I can give you the case study. I can give you their contact. Go and speak with them. They ended up bundling these products together because, as my friend Mike here says, nobody wants to buy a mortgage, right?
Yeah.
Exactly. Everybody wants to buy a home, right? Yeah. So the home might require a mortgage, might require a term life insurance, a household refurbishment loan, and a home insurance, and even a pet, right? If you're
possibly, yes,
out in the field. So a lot of people don't think like that, so they don't know how to effectively exploit this level of investment. And you could see this typically happens in a lot of big banks, but it happens with the smaller ones, because you get the CEO of the bank, attending this type of conferences or calling 11FS and, going to the, very smart sessions, and he gets, this is what I want to build, right? So then they commission somebody's like, Vincenzo, you understand IT, find me this type of technologies who can actually deliver that, right? And obviously, he will loop in a CIO or a Chief Digital Transformation Officer to assist with the recruiting of the technology. And then you go there and you meet them and you say, bang, finally somebody sees us for the unique, technology that we are. So we are going to rock. And then you go and you start talking with the head of lending, and you start talking with the people from the risk, and so on and so forth. And in reality, they say, yeah, brother, let's talk about this. So I would say that that's actually a bigger problem, because I think you can go around technology problems and mapping and integrations and so. And I don't want to say that they are trivial, but it's very difficult to make people curious, to make people that requires time. So this is a problem that I've seen as well.
Thank you very much, Teo.
Thank you very much.
Thank you. So I would actually...
Thank you.
Yeah, maybe we can utilize these other 10 minutes if anybody has questions from the public. There is a question. Yeah, Felipe. Yeah.
Don't confuse me.
Great talk. Thanks a lot, Theo. So my question is about the marketplace, the partner ecosystem. So some of the traditional vendors, by the way, I used to work for Finastra, but a long time ago. No offense.
It's a great company.
So they are trying to compete with, okay, my marketplace is bigger than yours. We have pre-built integration with 200 companies and partners. And that defeats the message that you have a solution that is modular and actually can integrate with anyone you choose. Why would you have that marketplace pre-chosen if a customer really needs to have a solution that can integrate with anyone? So what are the thoughts from a FintechOS perspective? Are you kind of building also this kind of marketplace around you guys, or you think that you should make it simple but not choose what are the partners you want to have? It's an open question in any case.
So I think that's a great question, because I've seen all sorts of that. And let me, again, controversial, let me tell you that I don't believe in any marketplaces that the technology providers are putting out there, right? It's like, I know that Mambu has a big marketplace, and Backbase has a big marketplace, and Finastra has a big marketplace, and I know the person who was in charge of that. And let me tell you, it's like, I don't want to dwell into the monolithical type of conversation, but it's like, these are not marketplaces. These are commercial arrangements, right? And in reality, Vincenzo, yeah, I partnered with him and her, but here it is. It's your responsibility. So my view of a functional way of doing this is, if you have the guts, embed certain technologies that you think are going to create a different a value add, for example, for your end customer. So help them navigate the complexity, assume the responsibility around the service, right? So that, for example, we have a global partnership with Onfido. And we actually did that, and we've done it with ID Now, Ariat Next, and we've done it with one more. Because I actually believe our purpose is to enable Vincenzo to loop in digital identity management, faster into all those onboarding customer journeys that he wants to build. But I'm assuming responsibility. Of course, there is a technological architecture where things are decoupled. And so that's one way of doing it. And I'm not saying you should basically incorporate everybody. The other way of doing it, and this is where I'm touching into, I use the term Fintech Infrastructure. What we at FintechOS believe firmly in is the high productivity Fintech Infrastructure. We call it the HPFI, because it's probably nobody really remembers it. And that I believe in the marketplace that, for example, ING has built, right? Because when you are the customer, when you are the bank, when you have the trades, the contracts, and the service level agreements, yeah, I believe. So my job is really give you to give you the technology, maybe low code, maybe pre-built building blocks, to allow you to build your best of breed marketplace. But marketplace that I'm bringing into the table, it's like when you're going to Amazon and you buy something from the Amazon marketplace, if the product is not good or it doesn't arrive, I call Amazon and they give me the cash back. So Amazon assumes responsibility for that service. A marketplace where the technology supplier doesn't assume any responsibility, I think it's a marketing marketplace.
Any other questions? Oh, yeah.
I have one quick question. So, sticking to the theme of the Fireside chat, hollow the core. My question is this something, a purposeful hollowing of the core? Do you believe that banks and financial institutions should, on purpose now, really think about hollowing their core so that they can move forward?
I think it's the only way for them to move forward. All I'm advocating is that don't hollow the core with another core, right? Don't move bricks from one pot to another pot, because that's not how you build a future-proof financial services infrastructure, right? That's not going to give you the flexibility. Instead of that, have different buckets, right? Move things, but keep things under control with this idea of a fintech infrastructure, right? So move from a kind of I'm just going to use it as an analogy, don't take it for granted. It's like move from a mainframe, because this is what a core concept is. When you say it's core, it can be only one, right? That's the core. And I get it, some people have, most of them have more than one. But conceptually, the idea is you have one core. I don't think you can survive 5 years from now by having two cores, the old one. See, you need to be able to orchestrate these, various infrastructure providers, right? Some of them are going to give you the ability to, build certain best. I saw somebody previous saying, if I want to take the best of breed payments provider, I should be able to take the best of breed payments provider. And I totally agree with it, right? So hollowing the core, I get it, is that what are you, or how are you hollowing it? Like because you would see the typical conversations being, well, take this API microservices enabled cloud core and start moving things from the old house to the new house, and you'll be so happy. I don't think you will be happy at all, right?
Okay, Teo, thank you very much.
Thank you very much.
Thank you very much.
Thank you.